Hello and welcome to our next NAP. NAP stands for Nonprofit Auditor Points. My name is Irina Ryzhkova and I'm your nonprofit auditor. I created these small videos to help nonprofit communities and everybody who involved in nonprofit communities, such as board member, finance team, to understand some accounting and auditing issues. They are not authoritative in nature. This is simple me sharing my experience with nonprofit community. I am a partner in a CPA firm, audit firm. We serve nonprofit organizations and we're located in downtown Oakland. And I'm happy to give back to nonprofit community. Okay, let's start today NAP. And today I would like to talk about multi-year grant. It's, in my experience, it's very confusing topic for a lot of board members specifically, and to a lot of people who analyze financial statements for nonprofits. And it's a challenging area because it relates to revenue recognition to nonprofit organizations, and revenue in nonprofits are quite complicated because it's run by two different standards. And today we're going to talk about grants, donations, gifts, and contributions, pledges. It's all interchangeably used. In a sense, they all some way gifts that given to nonprofit. And some of those gifts, grants, pledges can be given for multiple years. And we call them multi-year grants, multi-year donations. And they have unique way, specifically for nonprofits, how they should be counted. Let me give you an example. Nonprofit can receive a gift or grant or contribution from a donor that says, we're happy to give you $300,000 per year in the next 3 years. So this is the example of multi-year grant. Multi-year donations are very common in nonprofits, and ideally nonprofits would love to receive them because it's guaranteed them in future. So nonprofits kind of secure donations for the next 3 years. It's wonderful from the operating standpoint, but it can create a challenge from the reporting and accounting standpoint. So how nonprofit should treat these kind of donations? So first of all, when nonprofits receive multi-year promise, multi-year grant, the first nonprofit needs to make sure that it retains any communication from the donor that specifically indicates wishes of the donor and requirements of the donor, where the donor specify the conditions, reporting requirements, and so forth for their grant. And all these documents the donor gave needs to be retained, read, and understood and followed. And the management and accounting team needs to assess if this grant has any condition. Why? Because under standards, grants are recorded in full if they are unconditionally promised. The word is unconditionally is very critical. If there is no condition, the full amount for all 3 years needs to be recorded. Therefore, we need to see if there's any condition. What is condition? Conditions are, or sometimes they call contingencies. If they are present, the grant is not recorded at all until conditions are met. And conditions are, if you recall from the previous videos, are barriers plus right of return the funds. And the both needs to be existing in the grant letter. So you can look in my previous videos to understand what the conditions are. So we will not be talking about here, but important to understand the condition and restriction is completely different things. Please do not confuse those two. So if the condition in agreement is present, then we don't record any revenue. So we're not going to discuss it. But if you identify that there is no conditions at all. Condition again, barrier plus right of return the funds. If you don't find barrier plus right of return the funds, there is no condition. And there is no condition means the full amount of multi-year grant needs to be recorded as a revenue right away as soon as it's unconditionally promised. So as soon as nonprofit received a notification from the donor, very often it comes from in the form of letter, grant letter, some written communication saying we give you $300,000 for 3 years, total $900,000. The full amount of $900,000 should be recorded as a revenue and receivable, because money was not received yet, as soon as that promise was made, and it typically made in the form of letter. So what is very critical here, it doesn't matter when the nonprofit will receive the money from the standpoint of revenue recognition. All of it needs to be recorded as revenue as soon as it's unconditionally promised in a year 1, right? So again, step 1, we identify if there is no condition, the full amount will be recorded as revenue, whole $900,000. Again, condition, it's not the same as restriction. All multi-year grants, they are restricted by time for sure, because they are gonna say we're gonna give you $300,000 each next 3 years. So they're gonna be restricted by time, at least. They might also be restricted by purpose, but it's not a condition. Condition, it's different. It's barrier plus measurable barrier plus right of return the funds. So again, first step, reading the grant letter, understanding it. No condition, the full amount needs to be recognized as revenue and receivable. And it also will be recorded as restricted revenue because it's restricted by time. And very often in my career, I can see that nonprofits understand very well when the grant is restricted by purpose. They do track it and record as a revenue with donor restrictions and net assets with donor restrictions when it's restricted by purpose. But time is very often is not recorded correctly. So restriction by time is as valid as restriction by purpose. So it will be restricted by purpose. Therefore, that grant will be recorded in the net assets with donor restrictions and will be released every year as the time is gonna be passed by. So in a year 1, we will release $300,000 out of $900,000. The second year 2, another $300,000, and in year 3, another $300,000. So what is the challenge for multi-year grants? For multi-year grants, challenging when board members or donors or readers of financial statements gonna start analyzing nonprofit financials, and they will see in year 1 the whole $900,000, which is gonna be great year, revenue, large receivable because money were not received yet. But the organization will gonna start spending the funds in year 2 and 3. So in year 2, gonna be less revenue and more expenses. In year 3, again, gonna be less or no revenue for that grant, but again, gonna have at least $300,000 of expenses. So financials in the first year gonna look great with the big, we're gonna call it net profit, even though it's not profit, but it's change in net assets positive. And in the year 2, it's going to be losses. In the year 3, again, it's going to be losses. And financial going to be looked very distorted. A lot of board members look confused, not understanding why we have money, we're doing everything that we're supposed to do, but why our financial look less appealing than in previous years. So a lot of nonprofits that get supported by multi-year grants should look in the financials like profit and loss statement or statement of activities, not for 1 year, but for the year of the grant. because we understand revenue is recognized in 1 year, but we're spending this grant in the year 1, 2, and 3. So expenses are spread out over 3 years, but revenue is actually reported only in the first year. So financials will be distorted. And it's a part of the job of finance team to explain to board members and explain to donors and funders that our operating cycle is not 1 year. We're actually operating based on multi-year grants, and typically if you're funded by few multi-year grants, you will explain our operating cycle is 3 years. So please take a look at our financials in 3 years perspective, and then we're going to have another 3-year perspective. So when we're looking in a profit and loss statement in 1 year operating activities, very often for nonprofits that are supported by multi-year grant, their operating cycle does not represent in 1 year, and it appears their financial performance appears to be distorted because expenses recognized when they spent, incurred, but revenue is recognized when it's unconditionally promised. So these are accounting rules and we have to follow them, but following them does not make financial statement that represents only 1 year to be enough to understand the operating. Expense is going to be spread out over 3 years, revenue over 1 year. Therefore, this is the most significant challenge among nonprofits reading financial statements and not always understanding 1 year looks better than another year. This challenge very often does not exist for nonprofits that have a lot of expense reimbursement grants, or they have fee for service, or they have earned income. So for earned income, that would not be relevant. For multi-year promises, grants, that is very relative. So you have to remember, if your nonprofit is funded by multi-year grants, you will have a lot of mismatch with revenue and expenses if you look in a P&L for 1 year, because your operating cycle is longer than 1 year. So 1 year will not have a clear picture. And your nonprofit needs to be able to explain to your donors, funders, and your governance, such as board, why your financial statements look this way. The best way to explain it, to present the proper cycle. You will have not 1 year of operating statements available, but 3 years. So that will cover the full life of grant. If it's 3 years, you will have 3-year presentation. Some nonprofits presenting 1 year, but if there is a balance that carried over to next year, they will have it carry over on top and then presenting the second year, and just to show that we had that carry over. But it needs to be presented and explained to donors. Another very often challenge with nonprofits who have a multi-year grants is make sure that you keep a proper tracking information to reporting to donors, to donor who gave you multi-year grant. Very often, donors who support nonprofit for multi-year have reporting requirements for nonprofits to submit monthly, annually, and then final reports. And final reports will incorporate all the previous years. So if it was 3-year grant, then nonprofit should have good, robust information 3 years back to support the final report. If it was 5-year grant, nonprofit needs to make sure that nonprofit retains all the 5 year of detailed information that will allow nonprofit to prepare final report to a donor. So therefore, to conclude, multi-year grants are wonderful for nonprofit operation security because they ensure nonprofit future sustainable flow of funds. To securing multi-year grant, nonprofit ensures that it already has enough or some sort of funds for future operation, which is wonderful. However, multi-year grants do create reporting challenges for nonprofit that includes distorted financial statements if you look just on 1 year, and challenges to donors and funders to understand financials because they very often look only 1 year of performance. And also nonprofits need to make sure that it retains enough detailed information to be able to comply with the requirements of multi-year grant and submit all necessary reports, including final report that will cover all previous years. Hopefully that was useful for your nonprofit. If you funded by multi-year grant, congratulations, and make sure that your nonprofit set up enough sufficient system of controls to manage multi-year grants. Thank you so much, Irina Ryzhkova. Have a wonderful day, and I will see you for the next NAP. Have a wonderful, wonderful week. Talk to you soon. Signing off.